Welcome to this tutorial brought to you by To The Tick, and today's lesson is creating video number 2 to add to our library of videos working real chart data. Our focus today is going to be on bearish continuation patterns, and as a group, please note that all of these patterns are found on the website, video, text description, and chart samples on each of them individually, and there's also a video addressing them as a collective group. Quite a few options for you to further study and review. And as traders, we're going to review our background before we actually get into thinking about taking a trade. Where are we in our market structure and our price action process in the here and now? And I cannot stress enough how important and revealing these focused study efforts can be. I encourage you to learn your instrument with as much focus as you can on the background history. Again, where are we in this process of continuation patterns? It's a process, and that's what we're trying to find. Let's get started. Our video number 1 was on bullish continuation patterns, and that was video number 1. Video number 1, it contained all this material, and the background chart that I gave you showed a very large trending over a great big amount of time for what was the bullish base. In our immediate picture, we looked at this reference points as the base. I told you where the bulls were. I told you where the resistance was. And then we worked this pole as a brand new breakout, Point number 1 represents tip of the pole. It also becomes our apex moving forward as a major pivot. That is why we marked it with the purple dashed line. So it's pole number 1. It actually established our tomahawk pattern for our number 1, and we worked this big tomahawk triangle. Now, we also marked the major line of support, which is in the bright blue. Bulls are bright blue in my charts. And again, I try to always color coordinate our efforts in case this is the first video that you watched with us. We did the tomahawk, and then I showed you the background. Now I'm showing you that we've got this great big bullish background. We've worked the pattern. We've watched the breakout. We've also marked our apex. We've marked big bullish support. There's a gap underneath that did not get filled in. We've marked our major apex, and we've marked where they took a breakout and held. That's the little purple dashed line up here. Notice they're all color coordinated, and they'll stay that way. So today's chart, we're going from this bullish continuation, looking for those prolongation trades. Where are we in the path? So as a bull, up here in bright blue, as a bull, we got to be wondering, have they run out of gas? How high can they go? This is the first effort into a brand new resistance number. All right? Notice that for today's setup, here's your background. Everything in the background. We've done our homework. We know where we are in the market structure. And now we've seen them push a 1, 2, 3. And again, how many times are you going to hear me say 1, 2, 3? 1, 2, 3, first effort into new resistance. Notice the red dashed line. And what are we going to do next? We're going to watch and see where this bullish trending action may turn into bearish trending action. What has to happen up here? Obviously, prices cannot stay going in a straight line one direction forever. Is it about time? Is it about money? Is it about you're trading in an hour and you want to find your trades? You're always going to be looking for your trades right now. This is background, and there's a tremendous amount of information out of that, but what's coming next? So what does it take? It takes a reverse. I'm going to show you the reverse because I want you to see what it takes to have a bullish trend turn into a bear trend. At what point does it turn into trend going the other direction? And that's what we're going to work today. Okay, so let's get on with it here. You will be given a very clean chart. Like I said, in all of my library chart work, you're going to be given a real clean chart so that you can print it out for yourself and mark it up with your own notations. But what we're going to do today is we're going to be looking at volume here on the bottom, price on the right, and we're going to watch and work from a sequence of events from the left side of the chart moving towards the right. Everything that I add to the chart moving forward will be because I see it in the here and now, not knowing what's coming forward. All right? This is actually what came forward. Pretend you don't know it. Now, let's watch the reverse, and the reverse I have marked in red. First thing you'll notice is these are the notations that were on your bigger chart. Bullish base, that's obviously where we were coming from in the background, ran into our first effort of resistance, and the red line was marked. A left shoulder again, denoting resistance. They got the big thrust bars through there. You can see those big thrust bars, big high energy, big bunch of selling. The red line is two things. It's the left approach into that big thrust, and it's also where they broke down. So as I add more tools on the chart, again, as they happen, I notice there is no buyer's response once we break down. The breakdown line is the support line that broke in the background. It took 1, 2, 3 efforts and broke down. The line in the sand was not there. The line in the sand was this low, and that low ends up making a double bottom. There is very little response. You get a bounce right here out of the bulls on that first effort. It smacks its head on the breakdown, comes back down again. Several things that we can concur from here. First of all, we extend that line on the top. We don't know whether it's going to get there or not, but that is the resistance that they need to get through. Then the bigger target is show me that test on the top. But this is the number that got worked all the way across the chart. That's your first target, number 1. Number 2, it all works on the breakdown line, and we get the double bottom, and we notice the gap, and we see that there's very little buying involved with this pull-up. Most of it is over that gap period. That's kind of important. And they thrust themselves right into that red line. But from this much of the play, again working the reverse, we now can target a measured move from the reverse, all in red, reverse in red, okay, from that swing high that let go up there on the top, the most worked number up there, and come back to the double bottom. Now that does not mean that we're through yet. It means that this is where there were enough buyers that were willing to support a price. They did it twice. Therefore, you're willing to take that long bounce trade to see what happens. And this becomes the first place where they finally said, okay, head and shoulders, right shoulder, they could not get back to the top. But they've gotten pretty high. They got through the breakdown and they've gotten pretty high. So this becomes the first failed effort to reach back to the top. Therefore, this becomes the first effort to come back and retest the support. So the red section has now shown you support and resistance. It has now been outlined. It has been outlined with that apex right in the middle that's your breakdown line. From your history to and across the chart, where's their first effort to try to get back above, and again, trying to protect, and again, and again, and again, apex, squeezing to the apex. So point 1, first time you couldn't get back, point 1 support. 2, 2, 3, 3, squeeze tighter and tighter. And what happens right here is the bulls must prove something to you. They must prove that they can get up here, or we're going to be able to see that we've got no buyers, no proof whatsoever that they're going to get back through here. Therefore, we get to target a further breakdown. Notice it is still in red as a reverse. It is the target for the reverse based off of this measured move of the high here, the breakdown low, and measured move for your breakdown price here on support. Now, it's the first time that we've asked the bulls to prove something and that they couldn't really do it. And you're still giving the benefit of the doubt to the trend until they actually get the breakdown. So aggressive, looking at it as a reverse, This becomes your measured move target. That's the one now in the red dots, the lower target. I love how it works with your purple line in the background. If you recall, this is where they held the breakout line. They came back to that level. There were buyers there, and they were willing to support again. So this is again now the second effort to pull back to this number overall, and it's now held support again. So we're going to make that test again. And again, now from this breakdown point, the more aggressive bear can be looking to take a measured move from that breakdown on that apex, on that breakdown number, measure that distance to where they stop the decline, and there is your pole measurement, your first potential bearish continuation pole. Everything else before here is the reverse, okay? Make no mistake, you've had no confirmation for anything truly bearish until here. Until this fails, now you've confirmed that you've got that, and it's still aggressive because they're still not really letting go of the price. This is a rising wedge. It runs smack into the resistance here where you got your breakdown established as first effort to get back to that apex. Failure means we get to put our pole measurement from over here, breakdown, add it to the breakdown here, and that's our pole target as a bear. So we now have a reverse target and a bear target all coming to the same spot, plus background history for the bulls. You think it's going to happen? Repeat, repeat, repeat. And again, I'm going to have you notice effort, pull down 1, pull down 2, pull down 3. 1, 2, 3, and big volume coming out of the sellers. Sellers totally in control. They get to a capitulation sell. This was an overnight sell and drop, and then they bought. It's nice, strong volume until you get to another thrust bar once we get back up in here into the resistance line again. And notice that it's now your thick red line that got created. You're going, how did that line, why should I know to target that line, Lab? Go in your background. Where were they willing to support? Where are they willing to keep coming back every time we get a push? Where is it? Your resistance now is the orange dotted line. You know the red one up above it to give you 2 targets, but this is the resistance. Prove you're going to get through here the same way I ask you to prove it here. And if you can't do it, guess what? The result is the same. I get to look for yet another bearish trade because you cannot get back above that line. It's just that simple. They can't get back above it. I see this as a tomahawk. The apex on the left-hand side gives all the way across, gives me my targets. I measure the swing high, swing low of the triangle. That is the gray pole. And now I get to add that gray pole, subtract that gray pole because we're going down, subtract that gray pole's value from either the apex, from the big thick red line, from whatever you see in your chart that's really your resistance, and we're going to give ourselves this target. Again, now we got another target right back into the same spot. How beautiful is that? And again, 1, 2, 3 efforts. Look at your volume pattern. 1, 2, 3 efforts. How many of these go all the way across my chart are 3 efforts when you look at your volume patterns? 3 efforts. Correlation, volume, price. And another big hold. This is now the second hold. This is the first effort on resistance that's proven. Second effort now on support. And now we're looking for that final third effort on resistance with this bounce. Again, I'm paying attention to the volume. And after they get the second low, I now get to see another full leg. Because the odds are with this continuing to come down. As long as they can't get back through the orange, that is the current path. Who's in control on this chart? Is there more green or more blue? Dark blue, okay? Very simple things and yet very clear. So again, we get to watch them monkey their way back to the red line, get through it to the orange. And again, there's another turn. Where is your bearish pattern here? You decide, right? Well, what's your measurement? Whatever the pattern is, whatever you want to do, you're going to measure it from the same points. Either that main red line right underneath your breakdown line, but you're going to measure another pole in this path because, again, they can't get through that orange line of resistance. You get a drop. Thank you very much for the gap going my way. We get a nice drop. Notice the drop goes through that purple price, comes back to it. What was support, now becomes resistance on effort number 3. The pole measurement, little bitty flag, break down right underneath the flag, push 1, push 2, push 3. Right into your main bullish line. Great big battleground, the previous apex on that last big tomahawk trade. And again, this was another great big volume, more volume in these 3 pushes than any place else collectively on the chart. Sellers in control, and then there's a capitulation again. They dump everything they've got, and then you're starting to see some good size bars on the buying side. Good size bars, not this little dribbling thing. Yeah, the price is rising on air, but there's no real conviction in it. You want the conviction, and the volume tells you that story. Reverse trades, there are actually 3 measured moves in this reverse, 3 full reverse measured moves. Then, as far as the bears, finally letting you know that you finally get a trade is a continuation. The first measurement is here. The first entry is right here. First pole, second pole, third pole, and the whole big ball of wax dropping into that next level. You don't have to be trying to trade off those thrust bars up on the very top and think that you're going to hold it forever. There are multiple places for you to get in. Volume is the key. When you don't have any buyers, you can clearly see it. And basically your capitulation sell. And then what comes next? Let's go ahead and look at what comes next. So before I answer that question, let's review again the big picture. So this is what we first were looking at. What created the reverse? And at what point was the reverse actually turned into a bearish trend? Keep in mind, I told you this was about $7,500 all told, all the way up to the high, from the blue line to up to here. Pulling back, it was about $6,500 here. It's a bearish trend somewhere, right? $6,500 for one contract entry, a $50 risk. I think you can handle that. Look at how the tools are working together. Is it helpful having this history to know what might be coming next? Is it helpful when you mark areas like gaps? There's nobody in there. So what happens when we get back in there? It's going to be who's in control at that moment. Also, understand how important these major pivotal points are when we establish that pole in the background. How much is it still going to be important? And let's go ahead and move forward. Let's see how what we did in our work today, look at that. We're back to bullish trend continuation again, right? But was there plenty of bearish money in there? Yes. And at any given time, where are we? These are the major lines that we created today. Do you think they will come back into play? And as we move forward, history repeats itself, and learning the history helps a lot moving forward in your future. Noticing things like these gaps and then how they play the gaps when you come back down again. Notice how this great big breakdown got started with the gap. This big push here got started with the gap. We're going to cover some of these other topics moving forward. But this has been a tutorial today on taking a bullish continuation situation, reversing it, and really focusing on where does the trend change, and I can start trading with the trend again, realizing that the trend has now gone to the bears. So thank you very much. This is the conclusion of our video number 2. I have lots of great educational material for you, so come and visit tothetick.com.edu and subscribe, and I'll see you again soon.